At the 304 edition of the MPC, it was agreed that the rates, 50 basis points, should be cut for the headline rates, which took the asymmetric corridor and the SDF to 22, and the SLF would kind of regulate at 27 right now. My thoughts on the cuts is that market already anticipated a way bigger cut in the region of 200 basis points, but surprisingly, just 50 basis points was done. We've seen that securities and assets in the markets kind of repriced in line with that. But looking at what they did, which was just 50 basis points, there was a kind of retracement on yields. We've seen that there was some form of exaggeration on the anticipation of the rate cut. So what led to that? I think we still have fragility around the economy at large. The gains are still early. We can't begin to reverse those gains by a massive cut. So I think the CBN governor decided to just do something in the range of 50 basis points, which would support the idea of it's not a one battle yet on inflation, and we also need to support growth. And I think they've also been able to identify other tools, other economic tools to support growth, which they have in their toolkits, and I think they can use all of those. So going into the market, there's going to be another MPC meeting around May, which gives us ample time to, I think, gauge market and see sequence of events around how things are taking shape, and also largely again to support currency, because if you do a massive rate cut now, there's also the neighborhood scare of what are other regions doing. If there's still some yield or return promise better than Nigeria, there's a risk of an early exit into those environments. And I think the best thing was done in just doing 50 basis points, which supports the agenda of the new administration. The Naira is expected it's displayed relative stability in recent times. We've seen the Naira appreciate from highs of 1.4 to about 1.350 recent. In fact, at the point it got lower it hit about 1.320, which has supported the course. Naira has been quite stable and gaining strength. Do I expect it to remain stable? Yeah, I think by design of the central bank. There's also a risk of it getting not stable now, too strengthened. I'll say that will be the word, because there's also the risk of an early FPI exit. There'll be an advantage in if you see rates as low as 132, they carry trade on the transactions they've done in the country, which gives them it applies to them that they're having a lot of yield benevolence on those instruments. So we are trying to protect, the CBN is trying to protect an instance where there is some capital exodus in the system. So we'll see that it's going to be gradual, the movements will be gradual. There's some instances where CBN acts to come into the market to buy currencies just to keep the stability going. But I think they've been very right on the agenda. They've gotten that so well. So it's more about the stability. So people that are in the system to have carry trade benefits will enjoy it without kind of disrupting or dislocating, I think, the rates in the market. So I will project that with the build-up of the reserves where they are right now, at the last print, I think it touched about 48.5 billion in that region. So that's enough buffer to support the currency if at all there's a risk. And the kind of risk I'm talking about will be global risk. Maybe I'll say wars breaking out in some uncertain regions, which I think to an extent locally we've been able to insulate ourselves as a nation. So the Naira still holds a lot of promise. And again, because Dangote is now, drilling, exporting, all of those inflows are also, we've seen that the bill has also reduced. Those guys, the usual demand of going to refinery or exports that's led by the oil demand, all of those things have been taken off, and we've seen stability in the kind of demand we've seen in that climb. So my projection will be that the currency will remain stable in the next, say, 6 months without any external shocks. That's my thoughts on currency. In a pre-election year, usually comes with a lot of pressure on inflation. For inflation, we've seen a moderation this year. We've seen it moderate from highs of last read was about 15.1. The constituents of the baskets, which influence the inflation majorly, things like foreign exchange pass through into inflation, food basket, we've seen all of those things moderate. The impact of the stability on FX has really given a lot of positive to the inflation read, and we've seen full seasonality. I mean, the harvest season also come into play and kept the inflation very stable. Now, going into interest rates, that's more a monetary policy objective. I was saying the CBN have been able to rise to the occasion in terms of trying to moderate liquidity in the markets. They continually try to mop liquidity either by any of the toolkits that they have. They have OMO bills that we'll be using to moderate, to mop the liquidity, and also sometimes debit for CRR. All of these things have been very sequential, and then the sequence is so well and kept the market very just insufficient supply of liquidity, not to then kind of dislodge or dislocate other metrics in the market. So, I mean, my call on those will be that inflation will continue to be well behaved, and interest rates will also be well adjusted for the period. Alternate assets have become a hedge tool. People try to diversify from the US dollars, and that has taken them to either hunt for alternate assets. And if we're talking about alternate assets, we're talking about either cryptocurrency, stable coins, or gold. What I also find is that gold has become the currency of uncertainty. For people that have, in the time of war, I mean, it's been proven that gold becomes a safe asset to hold. We've seen that. We've seen a major rally in gold in 2025. It's done from between 2.5 and peaked at about 5.6, 5.7, which tells you that nations are beginning to build reserve assets in gold. And this will project to continue. Cryptocurrency also falls in that basket, but because of crypto has no boundaries. Even though it's censorship resistant, people can really not trace it. It's not the intangibility of it makes it very, very ambiguous as an asset class. Other asset classes in that category will continue to do well. Gold is still projected to do about maybe rally to about 8,000-9,000, and as long as you're seeing possibilities of new war breakouts in some regions, you will find that gold will take the advantage over currencies on that. So we stepped into a year where we've experienced enormous liquidity in the system. I think by design, CBN intentionally left liquidity in the system. We've seen a lot of advantage on currency. We've seen the currency appreciates very drastically. I mean, it's good for currency. CBN appears to not be under pressure to want to mop liquidity. I mean, the cost of mopping liquidity, they can avoid it as long as the currency is doing very fine. We've seen FPIs globally gravitate towards our climb. I mean, I think our return, our yield promise is still very attractive to them. And the people that have come in, riding on the back of the experience they had last year, they had a very sweet experience coming into the climb. They were able to harvest very impressive yield. I mean, the yield quality was good. So all of those things have continued to support the currency. So on FX, we are good. And for the stability that we've been able to ensure, that CBN have been able to kind of guarantee, we've seen a lot more interest in the jurisdiction, and that will continue. We came into a year where inflation prints was likely quite moderate, even better than expectation, and the market actually reacted to that information. We saw an initial rally build up on the back of a very good inflation print. People front-loaded purchases into securities. That also drove security yields down on the back of that. Mark was actually anticipating an MPC cut of about 200 basis points thereabouts in that region, but they surprised us just by doing a 50. I think for the overpriced valuation on instruments, we're seeing some instruments beginning to surrender value, and I think this will continue. I mean, the cut was not as anticipated in the market. A mix of all of these things has kept markets kind of lukewarm. There isn't so much pressure. Market is just trading range bound. But I think things will pick up now that we've seen the cuts that has happened. asset valuations will start again. We also notice that there's a lot of movement, a lot of activity in the equities market. There's an announcement of some additional allocation of liquidity to the equities asset bucket in the PFA allocation, which also drove equities to very new highs. I mean, the market capitalization also rose to some new highs. On the back of that, I think we'll continue to see FPI interest. The successes we've reported with the monetary gains, we continue to see that. The only pressure we have right now is on the fiscal side. We need to pump the revenue a little more. I mean, that will then secure the confidence. If the budget deficit continues to scare us, I mean, the investors will price that into our yield, and so we have to moderate it. So markets will continue to trade with a view of the currency will continue to appreciate, and the yields will continue to trade range bound. So the oscillation will be what markets will be out to take opportunity in, and I think we'll continue to see this. Another major announcement that happened in the course of this period is BDCs being allowed to buy $150,000 weekly, which has also kind of given some additional strength to currency in the unofficial market or in the BDC segment of the market. So I think we will continue to enjoy these benefits and continue to earn for yields around the ecosystem. Yeah, that's so for performance. If the projection will be that you just have to be at this good levels, just try to be long on either bonds or even treasury bills, because the yields are going to come down. We still have a lot of room to cut at the MPC. The inflation looks very good. I mean, I don't see anything in the very immediate term that will frustrate all of these gains. So I mean, it's only looking like one direction for the yield on the yield curve, and it's a good time to be long assets, just to benefit from or capture a lot of return from this outlook. At FSDH, can always help you meet your investment needs. If you have appetite for instruments, we can be your guiding partner through that. We can also offer insightful financial advisory for your investments. If you have FX needs, you need to take positions, you need to buy or secure FX. I think we also the go-to place to meet your demand. I mean, around a bouquet of opportunities or options, I think we'll always be the bank to speak to. Our offerings are also at reasonable pricing that will guarantee satisfaction for your interest. As we say, we're a trusted partner on your journey to success. My name is Jamiu Kuku, Treasurer, FSDH Merchant Bank. Together we achieve more. Thank you.